Hi, this is Optimus Futures, and we're back with our weekly roundup of key commodity and futures markets for our viewers. As always, please let us know in the comment section below if you have any questions relating to the analysis that we post, or you have any feedback regarding our effort in these sessions. Okay, so we begin our weekly analysis with the light crude oil futures market. Essentially, we opened the week around here, which is at this high over here. The week prior, we obviously had a very strong session of buying coming into the market, and we closed very strongly as well at the high. That's precisely where the market opened. We discussed last week that it wouldn't really be a surprise to see price sort of pull back towards the 5,700 round number in the long-term resistance area to test it as support, which is kind of what you expect from a market when it pushes past important levels. We'll see that important level again in a second when we switch to the daily time frame. But before we do that, I'd just like to quickly give you viewers a glance of the market as it was in the week that just passed. So essentially, it was kind of a consolidation phase for the market this past week. We saw some selling coming to the market. We had price sort of create a sharp two-pronged double bottom, and buyers once again were able to dominate close towards the end of the week, although we did fail to make a new high for the week, which is noticeable. This is kind of where we closed the week prior, and the high that we made for this week only barely just touched it. Actually, it didn't. So we technically we didn't make a new high for the week, and that is something that's going to be on the watch books for us. But importantly, I'd like to draw your attention to where price sort of bounced to regain the upward momentum. This was an area where we had some resistance, some short-term resistance, which actually kind of pulls back towards some evidence of support as well. But this is not the most important of long-term areas, but definitely was a very notable short-term support and resistance level. And if we sort of scroll back and throw in this trend line, so this is kind of the area that we bounced off of, and clearly when you throw in these technical indications, including the support trend line and this horizontal support and resistance level, the confluence here clearly makes for this action to not come off as a surprise to any viewers and investors and traders. So switching back to the daily, let's look at the big picture here of what price is exactly trying to do here. Why did it decide to pull back the week prior? So essentially what we have here is obviously a very long-term resistance area. Around here we had a very long-term and major swing high around here, and price bounced off of this level in the past year, again very sharply, not to the tick. We did see some spikes sort of shooting past this level, but obviously no daily close above this level, and price was just able to shoot right back down just as hard as it climbed into the level. So however, in the week we saw price sort of push past this level, close above on the daily time frame, and we just saw pretty much no pullback at all in the week prior to the last week. And that is why we kind of said in the video when we did it last week that we were expecting price to sort of pull back to this level, and really that wouldn't be a surprise at all. And that's exactly what price has done here. So despite the daily on Friday 2 weeks ago closing very strongly, we saw Monday sort of open up, and straight away price decided to pull back and test this area of support. Again, not very cleanly, which has been kind of the characteristic of this level. We never saw a clean bounce at this level. We never saw a clean bounce around here, and naturally when it turned into support, the action really isn't very clean. Part of that reason also had to do with the fact that the 5,700 round number was sitting kind of underneath the level around here, and it's just very common for the market to be chasing these round numbers in addition to horizontal support and resistance levels and trend lines and other elements of technical indications. So essentially we not only saw a pullback to the support level over here, the former resistance level over here, we also price also sort of dragged into the 5,700 round number and eventually bounced off of that. We already showed you on the lower time frame that this level sort of lined up with a short-term support and resistance level, as well as a rising support trend line. So that pretty much sums up the action that we had last week. As we said, we weren't able to make a new high the last week, which tells us that momentum may not just be very strong right from the word go when the market opens on Monday. We could see more action, more sideways action as the market sort of consolidates above this level, although it's going to be extremely important for this longer term form of resistance level that's turned into support to continue serving as support for the market to sustain the upward momentum here. Otherwise, if we see a drop back down here underneath the level and price pulls back and holds its resistance at the level, those could be some really good early indications of a possible fake out of this level, in the sense that price is probably it may just probably continue its way back down. So that kind of remains to be seen based on how we see the market unfold the following week. But we do suspect that price is going to be a little bit more sideways and consolidate for a good part of next week as well. Okay, so the next market we're going to be looking at is the S&P 500 E-mini futures market. Now, this has been a very interesting market to follow last week, and that's precisely because for the most part of the week we did see price action unfold exactly as we had expected, which is we saw a very strong period of buying here, which was again expected because the market had sort of broken out of this elongated consolidation phase where we'd seen a lot of up and down movement as the market was consolidating for more decisive long-term direction. And we were able to see some very interesting signs of bullish activity to come for this market, especially when we looked at the bounces here, and off of here, where price sort of just bounced off of this former resistance area. So that kind of just laid the foundations for some strong bullish activity into the market, and that's kind of what we saw unfold the week prior. Although we saw some fireworks late into the week, actually on Friday, based off a major American political news event, but the market was able to sort of erase most of the impact of that movement. So this was kind of just panic-driven selling that we saw here on Friday, and the market was pushed lower very, very sharply in literally just a couple of hours, and only for more buying to come in just above the 2600 level. Now, honestly speaking, we sort of expected price to make it maybe up to the 2600 level and the highs around here, where some strong buying could not have been really ruled off, especially when we know price is dropping so hard into the levels. But essentially we just bounced right above these levels, so we didn't really make it to the highs over here or the 2600 round number to the tick. But we sort of still made it into the area in general, and that's where the buying came in. And as we discussed in sessions, in prior sessions as well, when the market kind of falls or rises very, very sharply, it's usually a very, very good sign that the market's going to reverse just as hard as well. And that's precisely another example, and a beautiful example of that phenomena, where we saw price fall down extremely sharply and then just pull back just as sharply as well. So we were able to kind of erase all that panic-driven selling, and we're still able to close sort of strongly for the week. So if you look at the daily time frame, we still have a strong bullish closing daily candle for Friday, right around here, and which kind of just lines up with the long-term upward momentum that this market has been able to establish for quite some time now, which has been really, really impressive. So just going forward, we expect this bullish momentum to continue for this market, minus any minor periods of consolidation or pullbacks, which should really only strengthen the long-term bullish momentum that we've seen this market post. Okay, so the next market we're going to be looking at is the Euro futures market. This was another market that performed sort of similar to the S&P 500 E-mini futures market. We saw the first half of the week kind of clearly belonged to the sellers here. Then we saw some bouts of buying coming into the market and once again some spikes to the upside, some long sharp candles to the downside, and one sharp candle back to the upside. So it was once again a phase of consolidation this entire past week for the Euro futures market, and once again that was also pretty much on the cards. For one, we're pretty much sitting at the 1.19 round number level just about here. You can see the market was sort of just consolidating up and down that level a lot. We saw price sort of hold as resistance here. Was able to pull through the level around here. Then we saw a couple of candlesticks pulling back, holding as support at the level, continuing up, and once again this price sort of oscillating at the 1.19 round number. And of course, finding some support at these highs over here, and just these levels in general on the market over here. And the lack of momentum here can clearly be understood if you look at the daily time frame. And we talked about this in the video that we did last week, where we discussed how the market had sort of just nullified the impact of this bearish head and shoulders pattern. So we had a shoulder here, a head here, a shoulder here again. Price sort of broke to the downside, and we were initially expecting this neckline of the bearish head and shoulders pattern to hold as resistance for price as it pulled back, which really didn't happen. Instead, we saw a very strong close above. Price pulled back, held as support, and just continued its way on. And that's precisely at the point where we said that the pattern was kind of just nullified now. However, despite the fact that we had a very, very strong period of buying for the last couple of days into the week prior to the last one, we did indicate that the market was actually sitting at a very, very important level around here, which lines up with the head of the head and shoulders pattern, the shoulder of the head and shoulders pattern, the base of the head of the head and shoulder pattern, and the right shoulder as well. So despite the strong daily close that we saw here, we did caution that the market may just decide to consolidate here and sort of pull back off of this extremely important level. And that's exactly why price has been sort of just struggling for momentum a bit. So essentially what we have here is a market that's caught up between this extremely important horizontal support and resistance level and the highs around here. So it's a range bound market for now. Just looking at the momentum that we've seen the market in over the past couple of weeks or so, we do suspect the price may eventually be able to push past the 1.19 level and this level that we've plotted over here, be able to close strongly, pull back, hold the support, and continue its way on. But if this is really the beginning of a more elongated sideways period of action for this market, we may just continue to chop around quite a lot off of these spikes and major and minor swing highs and swing lows that we have pretty much littered all around this area over here. So really we kind of just expect price to, and so really we think a lot will depend on how the market action sort of unfolds in the first few days of the following week. If we do sort of push through this level strongly, we may be able to restore some bullish momentum, although we do know that even if that happens and price starts shooting up, we're still sort of just caught up in this extremely important high and this frame here of sideways market action that price will have to basically be pushing through the entire time, which may be hard for the market to do. And in that case, we may just continue to see the market go up and down a lot and just basically oscillate around the 1.19 level and the 1.2 big round number, which is right over here, for an extended period of time. So next we look at the gold futures market, and we start with the daily time frame because we've been referencing this time frame a lot in our analysis in the recent past for this market, precisely because the daily time frame kind of just sums up the market action that we've been seeing lately on this market really well. So essentially what we have here, we talked about this in the session that we did last week, we have the market sort of straddled between the ceiling over here, marked by the level just above the 1300 round number, which is right around here. We have some major highs lining up here. For the floor of the range, we have a couple of lows around here. That price seems to be really nervous trying to test. So essentially what we have here is a market caught up between these two levels, the ceiling over here and the floor over here, for quite a few weeks now, and last week was really no different. Although we did see some strong periods of selling coming into the market, it was still not very decisive at all, and that's kind of a good thing, because at the end of the day we really do not want price to be shooting very sharply down into either of the levels, because that may just indicate that it could be a run up to a major block of order flow, and we could see a move back in the opposite direction just as sharply. So we kind of like the action here. It's kind of expected to, given the fact that the ceiling over here kind of looks a very strong level. We have obviously evidence of extremely important resistance in the past at this level, and we of course have the 1300 round number as well. Towards the downside, however, we have a slightly better situation where the levels are not really that strong compared to the highs that we have around here, which kind of explains why price is kind of trickling down towards the floor here more than it is trying to test the high of the ceiling here. So we kind of just expect this sideways action to continue going into the next week, and we do, however, expect price to eventually make it down to the floor here, test it, and maybe if we get a close down below the level, a pullback, and we hold as resistance and we decide to continue down, we could see the market eventually making it down to levels close to the 1200 level and the swing low over here. That's sort of a long shot for now, given that the market is still pretty much one candlestick up, one candlestick down. The typical sideways action that you expect the market to display when it's caught up in a range such as this one. But just the recent amount of selling that's come into the market this prior week gets us to think that we may be pushing down to this level sooner than later, and we may eventually even push lower. But that kind of remains to be seen, as we said. So finally, we look at the 10-year Treasury Note futures market. Now, this is a market that we've been talking about as one that has been very sideways for quite some time now, and that theme sort of continued on this week as well. Although, if you remember, the last week we talked about how this market has been basically boxing around the 124.50 area. We did sort of break out of that theme this week. We saw price sort of make a very extended move outside and away from the 124.50 area. Although obviously the broader sideways theme sort of kicked in eventually, and price bounced off of these lows here twice. And the reason that it was able to do that very sharply is a very obvious one, and we get to that in a second. But before we do that, let's talk about some very important and very interesting price action we saw unfold this prior week. So the market sort of opened around here. We bounced off of this, off the mid-range level, support level over here. We bounced right off of it. Price pushed back, closed above. The next candlesticks sort of pulled back to the level, held the support, and price continued its way up. We saw an initial hold up at these two minor swing highs over here. Price was able to eventually close above, but look at the strong and very obvious fake out that we had over here. So we had a couple of candlesticks close above the level, and the next candlestick just shoots very sharply back down, indicating to us that this really was just a trap for the bulls here. Any kind of buying that came to the market after price sort of closed above this level was really just used as fodder for major selling to come into the market, and that's precisely just set up the momentum for the bulk of the week, and it really just belonged to the sellers for the most part. However, we did see a very strong bout of buying coming in the market later into the week, and the reason for that is, if you just go back and put things into perspective, it's really not hard to see why price bounced where it did. So it really was a very important swing low for this market. We had the market sort of just pulling back twice to this level in the past, and we sort of just saw history repeat itself here precisely to the tick. So we had an initial bounce. Once again, price dropped hard into the level, and we want to see that when we're looking for the market to bounce off a certain area, and that's precisely what we saw here. So the market dropped hard, price pulled back, it pulled back once again at the level, again very sharply, and again we had some buying come into the market, and price was able to really shoot higher after that. Once again, we have a spike to the upside here, which isn't to be much of a surprise either. Once again, we're headed into this phase of consolidation here at the top, and this kind of just explains why price did what it did, which is that it didn't really close very strongly for the week. So really, that's just been the theme that this market has been in for quite a while, and that sort of just continues on. Although we're still seeing some textbook stuff unfold on this market, given by the fake out that we just discussed, and this literally to the tick bounce that we saw here, where history literally repeated itself exactly like in the past. So that really just sums up the market action that we've had on this market, and this also sums up our weekly session. Once again, as we always say and we repeatedly say, do let us know in the comment section below how you're finding these sessions, and any tips for improvement or advice for making it better for you.